to my channel. I'm Doris. I'm here to show you about my stock account and market updates today. Since there is no market fluctuations today, we're going to be talking about some more economic outlook for the U.S. economy specifically. We know that since the very beginning of the year, there has been some calls for a recession by the end of the year or the third quarter, but none of the actual signs have been happening due to the strong labor data, employment data, and the strength of the labor market has been remaining still. There has been some positive outlook for the U.S. economy, and there has been some quotes of the CPI since July, where the CPI was quoted to the headline inflation was quoted to 3.0% year on year. But however, it did rise recently to 3.7 and 8, and it shows some signs of bouncing, and then investors became more apprehensive about the Fed interest rate outlook, which may perpetuate the recession. At the same time, we want to focus also on the other negative news for the U.S. economy, like there has been some turmoils in the government operations. For example, like last few weeks, there were some threats of government shutdown because there was a failure to pass down a budget outlook by the Republican House, and then although it did got prevented at the last minute, the far-right factions also voted down the Republican Speaker of the House, Kevin McCarthy. So there's been some turmoil in selecting a new one and also transitioning to a house without a Speaker of the House. Furthermore, there was some signs of economic crash by the end of 2023, that because the government budgeting has been tightened, that the debt outlook for the American students may be bad because just recently there's been a restart in the student loan debt payments, which means that for at least 43 million students, they have to pay at least a few $100s each month to pay off their student loan debt. And this has been worse to the U.S. This is like a worse news to the U.S. economy at this time, particularly because the credit default rate has been rising to 60%, and which is the highest figure for 10 years. So it is a concerning data that the students have to pay even extra to maintain their credit balance. That's all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.